Good morning, world. Today we're going to have a webcast on international securities offerings. We just leave the slide up at the start because normally people who connect for the first time, they connect via video and they then realize their audio is not working. So we leave this up to just make sure that people realize that they have to connect as well via the audio. So I guess with that, let's get started. So let's go through what we have for today. So I guess I just talk about logistics here. This webcast is for 2 hours, so it goes from in Brazil from 9 to 11. This is it's interactive. We appreciate people sending questions into us, and there's a Q&A and a chat, and we'll try to answer the questions during the webcast, if not afterwards. This also serves as training. We issue certificates to anyone who is present for at least 75% of the 2 hours, i.e. 1.5 hours. We also, for Brazilian purposes, this also serves as training for accounting purposes, but for Brazilian purposes, you're required to stay connected for 3/4 of the time and get 3 of the 4 questions at the end correct, and then our system records that. And for anyone that wants like a certificate for CRC purposes, you have to stay connected for 3/4 of the time and get at least 3 of the 4 questions right at the end. So today we have with us, we're going to do the initial survey. I'm going to have Alessandro Marchesino and Guilaine Saroul and Kyle Moffatt with us, and then at the end, around 11 o'clock, we're going to do the test for CRC purposes. And then at the end as well, we're going to give the contacts of the speakers we have today. The idea today is to cover what types of companies that normally perform international offerings, what are the principal markets in the world, the differences between them, how do offerings of debt securities differ from equity securities, what's the information presented in international securities offering, what are the implications of listing in international securities offering in a foreign stock exchange, what are the typical issues arising in international offerings, and why are the U.S. regulations used as a benchmark. Actually, just let me check that we have our speakers with us. Marchesino, are you in the line?
Yes, Kieran, I'm here. Good morning.
Okay, good morning, Marchesino. And Guilaine, are you in the line?
I am. Good morning, everyone.
Good morning. And Kyle, are you in the line as well?
Good morning.
Good morning. And please feel free to comment as I go through this from the presentation and the survey and make comments on it from just right from the get-go. So these are the rules in terms of, I guess, those people who've been watching. As I said, the requirement for 75% of the time in order to get a certificate, and then for a CRC certificate, you have to as well pass the test that we have at the end. And then our thing here is to keep calm and carry on. A lot of people are going through a lot of difficulties here during the pandemic, and our purpose here is to help the capital markets and help us get through this to the best extent possible. Some publications that to let you know that the publications in respect of this, we have a publication in terms of the global top 100 companies by market cap. This is something that was published in March and then published again in June, and then you have basically the top 100 companies in the world by market cap, and then the changes that have occurred during that time. We have the capital markets in 2030. This is a survey that was done in terms of the expectations of changes in the capital markets in the future. We'll talk about later. We'll talk about during this presentation. We've got the Global IPO Watch, and then so this is a global watch on the IPOs around the world. and then the top stock exchanges. So this is a link to understand the differences between the principal stock exchanges around the world. And then this is a means whereby you can compare two stock exchanges around the world in terms of the data on those stock exchanges. So that it's quite a interesting app. And then to let you know, next week we're going to have the webcast on the quarter close, and we're going to have with us Paula Homan from the tax side, Jessica Vinke and Renato Postal on the accounting side. So that's going to be next Wednesday from 9 to 11 in Brazil. And then to let you know that we're also going to have on November the 4th, we're going to have a webcast in English again on internal control and SOX. Yes, companies spend a lot of time and effort in terms of their internal controls. We're going to debate some of the challenges and I guess concepts behind internal controls in that respect. Let me get back here. And then I guess now we'll start with the survey. So we're going to go through just 6 questions here as a warm up. So hopefully,
I definitely need a warm up this morning.
yes, it's very. I guess, Kyle, it's an hour earlier for you, and it's already very early for me. So here we go. Do you believe your company would obtain a better valuation if it were to issue securities abroad? I guess this is I guess this is one of the questions that companies have to ask themselves before going for a international securities offering, if they're going to get better valuation, but it's going to be a better pricing, be it debt or equity, if they do an international offering as opposed to a national offering. And the idea, I guess this is one of the first questions companies ask themselves whenever they start thinking about international offerings. Normally it's more cost, because normally it will be typically more costly to do a similar offering in the local market. But the real issue is whether you're going to get a better value if you do an international offering. And then this is and then as we can see that from the answers, we've got potentially slightly better and potentially significantly better pricing on international offerings, and definitely better for some. And actually, interestingly, this is only very few are indicating here that they would not get a better pricing for the transaction in international markets. Okay, so let's go to the second one. Why do you think a better valuation for company securities may be obtained abroad? And in this one, I guess and then we have various options here, from more liquidity, specialist exchange with security, access to more specialist investors prefer foreign exchange regulation, better investor protection, and more rigorous corporate governance requirements. It's interesting that in the Brazilian market, what we're seeing is that almost all of the companies that are performing IPOs are performing them on the exchange with the highest level of corporate governance, and then this is seen as I guess as a significant differential, at least in the local market. So we'll just wait for the result of this one to come out. What do you believe the reasons are for potentially a better valuation abroad? And then we have, I guess, majority going for more liquidity, and the next ones are access to more specific investors, and then more better investor protection, and more rigorous corporate governance. So let's go for the next question. Which exchange do you consider to be the most attractive? So if you're going to go for a listing on a foreign exchange, which of these listings would you find, or which of these listings would you go for? And then we have a list of exchanges. And then we have like New York Stock Exchange, and these are, I guess, the principal exchanges around the world: New York Stock Exchange, NASDAQ, London Stock Exchange, Toronto, Japan, Shanghai, Hong Kong, and potentially another market that's not an EU regulated market in Europe. And I guess we've seen a number of securities going into non-EU regulated markets. So I guess the time's up on that. And I guess it's just worth pointing out this year is for those companies that want to go for a listing on a particular exchange. And obviously there's a lot of international offerings that don't go for exchanges. The majority of people went for the New York Exchange, followed by NASDAQ, and the others are very small. So I guess a lot of people, if they are going to list somewhere, I guess that's what we've seen is that the companies that do list somewhere list in the, I guess principally look to list in the US. Okay, and then if your company was already listed in local market, where would you consider a dual listing? And then here again, a slightly different question: that if you're already listed in, let's say, in Brazil, where would you look for a dual listing? Would it be New York, NASDAQ, London, Toronto, Japan, Shanghai, Hong Kong? Where would be which of these markets would you be looking for a dual listing on? And then different markets have different requirements. I guess different levels of restriction for dual listings. And I'm guessing if the principal markets are considered to be New York and NASDAQ, then it's probably likely that people are going to go for dual listing on those markets as well. Although dual listings are permitted, at least on London and Toronto, you can have I think a number of dual listings on those as well. Right. So the polls ended. We're just waiting here for the result to come out. Yeah, so I guess similar result in New York Stock Exchange, followed by NASDAQ, and then the others coming in much further behind. Okay, let's go for the next question. So which of the principal challenges of making an international listing, and what do you consider to be the principal challenges of making an international listing, be it cost, time to prepare documentation, regulatory requirements, preparation of high quality information in English, contracting advisors and auditors, windows for launch, and the windows in order to launch the transaction, and volatility in the market. So I guess which of these challenges would be considered the principal challenges in order to make it international? So cost, time preparation, the regulatory requirements, preparation, high quality information in English, contracting.
Or all of the above.
That's why
I don't see a G there.
Yes, exactly. That's why you can choose more than one. So that's why I purposely did
click every button.
Yes, exactly. at least then you have to think about each one.
Yeah.
Yeah. So So although we didn't have let's see what the results come out. Yeah, and a lot of people clicked a lot of these buttons, so I think all of these items appear to be important, and I guess with a little bit more in terms of, interestingly, a little bit more people on regulatory requirements and less on time to prepare documentation. I guess so I guess we'll go for the last one. What are the principal risks of having made international securities listings? So I guess what are the risks associated with this, like ongoing regulatory requirements, internal controls, risk of litigation, difficulty in delisting, change in foreign regulations, maintaining transparent disclosure of risks and sensibility to them. I guess here's whenever you decide to, whenever you think about future risk of an international listing, I guess what are the items that come to mind? And here again, you can click in on all of them if you wish, or choose those ones that you consider to be the most important ones. And so the time's up, and hopefully we'll just just waiting for the result to come out. And so we have ongoing regulatory requirements, internal controls, risk of litigation, potential change in foreign regulation, but people are not that much concerned with difficulty in delisting, nor in maintaining transparency. This is which is relatively interesting, because I know that we've had a number of discussions with companies in terms of the difficulty of delisting once, especially listed in the US. So I guess with that, we'll now move over to Marchesino. So Marchesino, it's over to you, and hopefully you can control the slides. If you move the mouse to the left, the control should appear, and then you can move the slides up and down.
I see the controls here. Thank you so much. You guys hear me well?
Yeah.
Okay, great. So good morning, everyone. It's a pleasure to be here today. It's a special day here in São Paulo for those of you in São Paulo like me, because it's a back to school day, as Kieran mentioned the pandemic before. So the first time, I'm not hearing some screams throughout the house, but let's see how it goes. Hopefully everything goes well. And I'm glad to be here. And first of all, I want to thank you, Kieran, for the efforts you are doing, and for the great job you are doing putting out every week a very special live like that, to enable the market to have more appropriate and accurate information. We appreciate your efforts, and we do have a lot more to do, but you already have done a lot of lives like that, and congratulations for this work and the quality of all those lives.
Yes, pleasure. Yeah.
So I'm Alessandro Marchesino. I work with capital markets for the last 20 years. I've been involved in many deals in Brazil since 99, 2000, and it has been a very interesting, time. We are recently living in Brazil with, a huge boom of IPOs, as I believe you all know. There is a line in which CVM, our local regulator, we know that they are reviewing like around 450 potential filings. This is amazing for the size of Brazil, for the size of our market. We recently had a huge boom. Now we can see some signs of that boom being slowing down a little bit. I believe that should be a little bit. The market is adjusting itself for a more like stable moment, for a more stable future. We realized that, I think the market realized that some valuations were not aligned to what the investors would expect. We have seen some, price range adjustment. We have seen some companies also postponing IPOs. So it's been a very interesting moment here in Brazil. However, we see the activity is very, very high. A lot of companies, looking for, support and advisors about how to make an IPO in a more, let's say, in a more favorable tax table now. As we all know, and we're going to discuss a little bit more here, preparation is key. So we are seeing now this effect. So as I go to the next slides, Kieran, Kyle, Guilaine, please feel free to add anything you want. Okay. So I will go through some figures here, and I think in those figures we will confirm. And I think, Kieran, in terms of the survey, we did pretty good in relation to what the global survey we have then will show. We have recently done two research. Those were made by our IPO Center of Excellence, and they basically these two research. The first one we discussed about the capital markets in 2030. And the second one, we discussed about, market cap of the company. So here's what we have. Here, what we have is, something that has been said by Ross Hunter. He's our IPO center leader. And we performed the first survey about capital markets, about future of capital markets in 2011. And when we compare the results of our survey back in 2011 with the real figures of 2019-20, the reality is that the markets performed much well than we expected, especially New York, London, and Hong Kong, which are bigger markets, have more liquidity. As we know, China. The growth of China and also helped a lot in market in Hong Kong. But you will see here some figures in which we're going to show you the pictures as of today about how strong each market will be in the future, and with very exciting information about Brazil, B3 and Bovespa, or Bovespa. Okay. So first of all, when you think about what exchange is good for your company, I think in the survey the replies were very well. As you can see here, NYSE and NASDAQ, are the biggest ones, and also they almost doubled the size in terms of IPO value. I'm sorry, in terms of market cap when compared to the research we have performed in 2011. So in terms of market cap that we currently have in the US, that would be the 309 for New York Stock Exchange and 152, which takes us to like $460 trillion in market cap. I'm sorry, 25 here around 22 and here around 10. So in fact, it is $32 trillion in market cap, in the U.S. located in these two exchanges, with an IPO value of $460 billion since 2011 through 2018.
Hey, Marcus, what do you think this slide would look like? Like if you were to do this today, what would your expectations be?
Yeah, Kyle, that's a good question. We have seen some, recently, I think for the, until December, we have seen a declining market cap of the, some U.S. companies and some recovery during this last 6 months. And the reason is why we're going to show you about that. I would expect today those figures to be a little bit, not as big as they are today. As
right.
Hearing as of December 18, in terms of market cap, but and just because there has been a decrease in the stock price of several important companies in the U.S.
Yeah, we'll talk as well about the nature of these companies and which type of companies are getting higher value as well, because it seems to be a trend towards technology and innovation in terms of the higher values.
Yeah, we're going to show a little bit a figure about industry as well. So what is very interesting is that, and I think the information we need to share with our audience is that, no doubt that NYSE, NASDAQ, they are and therefore the U.S. market, maintains the, by far on that, and it's something that should always be considered. Unless you have any other type of specific business, or you are part of a organization that is also part of and the domicile country in another, like in Europe, which there are good or other good options, but U.S. is usually the best, biggest market because more investors, more liquidity, more peers to compare to your company.
Yeah, I guess we expect that the U.S. continues to be, I guess, by far the largest market. Whenever you put NYSE and NASDAQ together, and both of these require listings with the SEC, but whenever you put those two together, they dwarf the other options in terms of market cap. I mean, it's really it's striking whenever you look at this graph in terms of how much further ahead they are than the others.
Yeah. Okay, so going in a figure by sector now, and the main stock exchange we have, so we can see a lot of activity in the financial sector. Basically here, and that is coupled also with the technology companies, as we have seen, at least here in Brazil, the digital finance evolution, those markets are evolving. So there's a lot of, new types of process of payment, financial related companies that are, now accessing the market. So, and basically, although London has a lot of, activity in the financial markets, and as we compare here, because, New York is much bigger, like 30% that would represent this gray figure here in New York is much bigger than like 60% in London. So still huge number of financial institutions going to New York, and later on the technology companies also reaching.
And Marchesino, it's Guilaine. Maybe one comment here from our side, because obviously, like you mentioned, I work mostly with the New York market, right, the U.S. market. I would say that the IPO activity we have seen is definitely very much into the biotech, the different technology, like you said, online services, type of IPOs, a lot of biotech. And one of the very interesting things that compared to prior period is we see more and more just listing in the U.S. from international companies all over the world directly and only to the U.S. market. So we see a lot less dual listing than we used to see, and a lot of smaller company as well. And we'll talk about it a little bit further on. Some of it is due to some of the rules that the SEC put in place to facilitate the capital formation. So you can definitely see the impact of that very clearly in the activity that has happened with companies as well that are in a much earlier stage of development as well that we used to see. So two big things is a lot more IPO in those sectors, a lot earlier in the cycle of those companies, and only in the U.S. versus, dual listing. I think I would just want to highlight here that is a big change compared to prior period.
Yeah. And Guilaine, just to confirm that we are also seeing that movement in Brazil, Brazilian company listing only in the U.S. We have recent examples and very, we saw a lot of companies doing that here in Brazil, differently to what they had done the companies had done in the past, in which they always listed in Bovespa or B3, and then decided about the dual listing. Now we have seen quite a few companies going directly to US because of those, because the markets are more, the investors are more experts in their businesses because of liquidity. We're going to discuss a little bit about that as well.
I guess one other thing, whenever I look at that graph as well, is that the line between financial and technology seems to become more blurry, because if you want to be successful in the financial space, you're going to have good technology. So almost all the offerings I've seen on the financial side have a significant element of technology in them. So everything I've seen in financial has some sort of, seems to have a strong link to the technology side as well.
The one thing that I find interesting looking at the slide and kind of listening to each of the panelists, with the trend, this trend and what you see here, it's continued, right? And I think we're seeing that in 19 and 20. And when I was at the SEC. For as long as I was, towards the last, I guess, 4 or 5 years that I was there, for probably about 2015 to 2020, that I was there, that they really experienced a huge increase in biotech IPOs. And of course, as you indicated, kind of the financial services, the tech side of things. And so it's interesting because that trend was so obvious that during last year, 2019, the staff actually that were reviewing these filings, they actually moved them around. They actually put a lot more accountants and a lot more attorneys into the group that would be able to review the biotech companies and the financial services companies. And so those groups are huge, and they actually dwarf some of the other groups of industry offices throughout the division that review filings. So, the real estate group is much smaller. The tech is still there, but some of the other groups are smaller than they used to be. And they used to have 12 offices reviewing filings, and now they're down to 7. And like I said, I mean, there are a lot of staff looking at kind of this big uptick in biotech IPOs.
Okay. So when we asked which of the following exchanges was the issues considered to do an IPO in addition to their home exchange, we see a similar trend to the replies they received, NYSE and NASDAQ, on top. London with some activity as well. So as we see, companies are always looking, which is good for the second option to make the IPO or to make the transaction more attractive or look for specific investors to a specific market. But what is interesting for Brazil here is that some 9% of the respondents said they would consider Brazil as like a secondary listing. So we recently, the B3 and the CVM are working on rules to facilitate the access to the Brazilian stock exchange, which may provide investors. We are seeing in this moment a couple of companies doing the BDRs here in Brazil to sell and list and sell their stocks here, which is a trend that we have seen quite only a very small number of companies moving towards this way, and with this expectation, Brazil starts to be in the world in the worldwide scenario for expecting like Brazilian investors and a more professional market. For sure, the size of the market matters. Brazil, the size of our market is increasing. We are, with the low interest rates we are having right now, inflation under control. Our market's growing, but it's this is very exciting news that companies abroad are looking for Brazil as a secondary listing.
Yeah, I guess the other interesting thing here is that for dual listings, the London Stock Exchange is more popular than NASDAQ. And where you look at the number of listings, it was significantly behind. So I guess they have London Stock Exchange has a focus on international offerings and dual listings. Obviously, they must have, which brings them into second place here.
Yeah, that's right. Yeah. So, but that's aligned with the replies we received from the audience, right? Basically, NYSE and NASDAQ on top. So, on this slide, as you're going to see, from which countries will most issues originate, and that is very well aligned with what we already expected. China, with the economic growth of China, a lot of companies, going public. India as well, a lot of activity in India. Guilaine, if you can add a few words about India later on. U.S., it country that is very, it has the largest capital markets in the world, and is still on top of a new origination of IPOs with 41%. And here's the great news for us here in Brazil. 21% of the of the transactions that will be originated in 2030 are expected to be Brazilian, from Brazilian companies. I think, there are very important things to happen in Brazil, tax reform, growth of the Brazilian market, capital markets. However, that shows the potential that our country has, several sectors, as we know, financial sector, agribusiness, several, wholesale. We are seeing a lot of activity, a lot of sectors in Brazil. For that reason, it's important for us to, maintain the expectations high about Brazil and, make our plans accordingly to get there, as soon as, you can.
Marchesino, it's Guilaine. Maybe one additional point here. I think what is interesting on the country chart in my mind is two things as well. Is you see a lot of activity coming back from like Brazil, like you mentioned, and we work on a lot of deals together. A couple of new companies or new countries, I should say, as well, that have been more active out of Europe. So the UK, Germany is coming back, Switzerland. That is not in the chart, but it's coming. And if you were to group a couple of other countries in Europe to give more like a European view, you will see Europe being pretty high, which they had not been active for some time. So I think it's very interesting that we are seeing as well activity out of countries that had been a little bit out of international offerings or not as much involved out of international offerings for some time. So the activity is a mix of the couple of, technology, biotech, like the sectors that are more active, and then some other countries that are like looking now to the U.S., partly because the local market might be less attractive, like you pointed out, investors, or the rules that the SEC tried to put in place there to facilitate. So I just wanted to highlight as well that the broad range internationally is quite different as well than it was like 2 years ago, for example.
Yeah. Just as well, for those people who joined us, obviously this is interactive and you can send your comments and we'll try to reply to them. So we've got a question here from Paulo Aracaki about how does Brazil compare to the 10 largest stock exchanges. I think actually in that slide of the largest stock exchanges, Brazil was there. I think it was like the 8th or 9th, and it was under BSE, Brazilian Stock Exchange. So I guess it was there. It was just much smaller than the others, and obviously these numbers are from before the pandemic, and during the pandemic, obviously we suffered a very large devaluation of the currency, so which would have impacted this as well. But it's in the list of the 10. Paulo.
Yes. So moving on to the next slide, in terms of exchange, the issues we would consider, beyond the home exchange, again, as our audience replied, NYSE, Nasdaq on top, because of the size of the market, investors that are, know more about the business, the industry, followed by the London Stock Exchange. And again, Brazil is here as well, which shows, some international activity, at least for issues, considering or looking Brazil as an opportunity to invest. And here's a slide that is very interesting because we then discuss about reasons why a company would choose a stock exchange on a specific market. The first factor that was noted was liquidity. Companies, banks are, very concerned to provide good liquidity to investors to, buy and sell, with a reasonably high degree of facility and then the liquidity is also very well connected to the size of the offering. We have recently seen some transactions that have been postponed because the size of the IPO was smaller, and they were considering to do like only an IPO in Brazil, and because of that specific moment, that is small, like a smaller IPO value, like 500 million, was no longer applicable and would not provide enough liquidity to investors. While if they would have like $1 billion, an IPO of a value of 1 billion, that would then attract more investors and then provide more. So liquidity is a very important factor for the companies to consider, to have proper pricing, to have the markets reacting to their performance in the share price. Second is valuation. Valuation is more connected, I think, to what we can see a little bit below: analyst coverage, the size of the investor base that is connected to the valuations. As going to a market like US, London, you will definitely meet investors that have more experience about your business, because of the size of the market, number of companies, peers you have, and therefore you are able to get a more appropriate valuation for your business. The third factor here is cost of listing, and that is more related to the, I would say today, the governance and rules and internal controls and requirements that some regulators, the stock exchange requires. Although I believe the world is moving to reach the same point that the more transparency, the more governance the companies have, the better for the investors. Now, as we all can see, there is an ESG movement now, which is huge, and the company should consider and look into it with a priority, with very serious eyes to establish what is necessary. However, cost of listing is still important. By the way, I think, Kieran, it's worth mentioning that in Brazil we performed a survey about the costs for an IPO. We released it last year. So with great results. Kieran, if you can later on comment a little, or if you can talk about it now.
I mean, I guess there's two major conclusions. First of all, that obviously the smaller the IPO, the higher the costs as a percentage of the funds received. So if you're doing an offering of let's say $100 million, then the percentage of costs could be up to, let's say, up to 8-10%. If you're doing a much larger offering, then the percentage of costs could be much smaller, less than 5%. And I guess the second thing is that if you're doing a local listing, the costs are significantly less than doing an international listing. And whenever you look at the especially looking at and comparing it to the U.S. market, our survey compared the U.S. Like listings for NASDAQ and NYSE compared to listings here in Brazil, and the B3 and the B3 the costs were significantly less than in the U.S. market. I guess those were the two main characteristics, but there's a lot more detail in it, and anyone wants publications, it's on our website, and feel free to access that.
Okay, Kieran. And then we have, I think with 20%, we have here the peer group performance comparators. And here's one of the reasons we have seen some Brazilian corporations listing only in the US, like PagSeguro, XP, Stone, because they believe that the market there would, analyze their businesses with more with more factors, because a lot of U.S. investors already had experience with those businesses. Okay. So as it relates to region, sector, and companies, we see in the U.S. in June 20th, and here's Kyle. I think the reply to your question back there about what that graph would look like today. So we have in the U.S. the top 100 companies, like 16 billion. That's in fact 16 billion dollars. Is trillion or billions here?
No, I think it's trillion, because the numbers are in 15,000 billion. So
that's right.
Yeah,
that's right.
16 trillion.
16 billion. And there has been a slight change from December 19, and in March we already seeing a 21%. So these figures, when you compare last year, they decreased a little bit, followed by Europe and China with 3 billion. However, as you can see, U.S. market is by far the largest market.
Yeah, I'd be interesting actually to hear if the U.S. because the U.S. clearly have a huge lead against the rest of the world in terms of capital markets, and it'd be interesting to see if there's any concerns about the future. There's a lot of discussion about for example, the elections, and that regardless as to who wins the election, that it will create a lot of that there will be a lot of discussion about that whoever loses the elections will create unrest, and I guess what the future of the U.S. environment is, and will they, do they believe that they'll be able to maintain such a huge gap with the rest of the world in terms of capital markets? Because currently, there's just a huge gap, and it'll be interesting to see if they can maintain that for the next 5 to 10 years.
Okay. And here I think that's the last figure about the changing in market capitalization. We have seen, by sector, we have seen a decrease from December 19 through March 20. For sectors, stock prices decreasing. However, during the first semester of the year, some of the sectors were able to recover, which could take to a position back to where we were back in December 19. However, that shows the recovery we recently had in the global market in terms of stock price. In terms of company performance, those are the largest companies, listed companies. So we had Saudi Aramco with the changing in market cap, oil related issues, consequence, but Apple,
Yeah.
Microsoft, Amazon, Alphabet, doing good. Volatility there, but still doing good, still increasing their market capitalization since they are leaving.
Yeah, and I guess other than Saudi Aramco, which is energy, the rest are clearly technology, and it's a big drive on the top valued companies of have a huge, investing a huge amount of money in technology and innovation. It's, I guess they're able to create all of this value off the out of technology and innovation, which is a big driver. I think even in our local market, we've seen that it's a very important factor in the especially when you get into the pandemic, where I guess the technology becomes even more important.
Yeah, I think the other thing that stands out too, Kieran, is when you look at these four, they really have very strong customer bases, right? They have different, they provide services, they provide products, and so their customer base is so broad that I think it's something that obviously helps them grow. And so when you're selling to the other companies and you're selling to the government, you're selling to consumers, retail consumers, that obviously will help you maintain that market capitalization and your growth in revenue.
Yeah.
Okay, very good. So Kieran, now back to you. I think that Guilaine, so we now leave space for our our highly regarded international speakers too.
Yeah.
Our audience.
Yeah, and Guilaine and Kyle, I think it's worth mentioning. I remember was on a call within the last week, and one of our and I guess the comment was, there was it was one of our clients commenting, and they said that in their minds that and this is a general comment about the discussion of what they call the national office, that the people in the national office they're like these demigods who walk around with these shrouds and they make that they sit on their chair pondering for hours in terms of determining the future fate of these companies. And I was just thinking that's a very very different view than what I have into the reality, but I thought it was a very interesting concept of what they were thinking. But maybe if you could tell us about your experience on international offerings.
Sure, and I will ask Kyle as well just to chime in here, because I think we didn't even we jumped in on all the discussion and didn't do all the introduction. But as you said, we're both part of national office, and I never really think about ourselves like what you just described. But I'm happy to
sitting in our ivory towers.
Maybe Kyle, because
I only wish. I'm sitting in my basement right now, so.
That's okay, Kyle. I think and so I'm part of the U.S. National Office, like you mentioned, Kieran, and my experience with international offerings. I've been working on international offerings for quite a few years. I focus primarily on foreign private issuers reporting under IFRS and specific countries like Brazil, Europe, South Africa, Australia, like you mentioned, so exactly on the topic here. And I would say a few things based on my experience on international foreign. We talked about a lot of the IPOs market, and I chimed in a little bit based on that and where and which company are coming. I think we see as well a lot of activity in the 144A market. We didn't talk about it too much, and we can definitely talk about it a little bit further. So without reg rights. So a lot of 144A for debt raising has been very much active as well. And a lot of companies doing a 144A in the U.S. market and potentially an offering somewhere else. So that is one of the things. We've seen as well a lot of transactions involving mergers and acquisitions. So if you think about, especially in this environment of COVID, there's been, and before that, there's been a lot of companies that whether spin off a piece of their company or sold one piece of the company to another one, and it could be significant to another registrants. We have seen a lot of mergers, and like we mentioned in the previous webcast, we've seen now a trend on more like SPAC transaction as well, so that some will call it as a backdoor IPO. So there is definitely a variation and a variety of transactions we have seen coming to the U.S. Under those different circumstances. Kyle, I don't know anything else you want to highlight there?
Guilaine, you have undersold yourself. I've known Guilaine for a number of years. Got to know her while I was working at the staff of the Securities and Exchange Commission. I worked there for 20 years and recently left. So I joined PwC as a partner in April of this year during all the COVID. So I've met Guilaine in the past. I've met others. Not too many people. I've been working remotely, as I said, from my basement. But I primarily, when I left the staff, I was the chief accountant of the Division of Corporation Finance, which is the division that reviews, company filings, reviews IPOs and transactions. And I spent 12 years reviewing filings. That was my sole job. Reviewing filings, from companies that were filing their annual reports to companies that were, having transactions. And then, obviously over the years, ran a few of our review program offices. When I left, I was chief accountant and the disclosure program director. So I was fortunate enough to have oversight of the disclosure program, the 7 industry offices that review all of the filings, at least of corporate filings. And there's probably I think we had around 7,000 reporting companies when I left. So, decent size, decent number of companies. And of course, that was something that, the SEC had to review companies once every 3 years. That was kind of a congressional mandate. So definitely very busy time. But since I've been at PwC, I've been spending a lot of time. I've spent some time with Guilaine, and we are not sitting in our ivory towers, just looking out at the world. And we actually work together quite often. Usually there are fire drills when Guilaine pulls me in at the last minute to work on an issue. But I pretty much provide a lot of support, technical support. I have a lot of rulemaking experience at the SEC, so kind of the ins and outs of navigating some of the technical requirements as well. So that's kind of some background on me.
Yeah, I guess one of the things that is always striking whenever we go to the U.S. is the level of detail and complexity of the regulatory environment compared to our own, and I guess that's just come from decades and decades of experience in the capital markets.
Yeah, I mean, if you think about it, right? You had the Securities Act and Exchange Act were in 1933 and 1934. And over the years, like you said, it's decades and decades and decades of experience. And every time something happens, in the economy or, there's 2008, the crisis, then you have a congressional response, right? And so oftentimes it's Congress that is kind of imposing the rules or changes to the rules. And they do it with broad strokes of the pen. And so, they could come out with something that's 2 pages long, requiring the SEC to pass some rules. And then, of course, what happens is they wind up having to 150 pages or 300 pages or whatever of these releases. So, they definitely, they get a lot of attention. And of course, the other thing is too, that they are exposed for comment. So when you work on a rule, the SEC gets comments from, issuers, from, representatives, from, legal counsel, from the audit firms. And so you get a lot of input. And as you get that input, you then kind of feel the obligation or duty as a regulator to include that and address those issues that might arise once the rules are actually effective.
And maybe on that point, right, Kyle, I think you mentioned, and Kieran as well, when companies are thinking about doing an international offering, whether it's an IPO or 144A or a merger or any other, or the above sometimes. And like Kyle mentioned, we are very glad to have him, with all the years of experience at the SEC. It's very useful and insight for us when we have a fire drill. And based on that, I would just say one of the key points when you consider as an international company out of Brazil or another country is just to make sure that early on you identify really what you're trying to do and have the right team in place early on. Involving the right people is very important. We make sure as well to be connected with the local team in the U.S. national, and I've worked with Kieran and Marchesino a lot. And I think it's very helpful because we try very much to avoid the last-minute fire drills, which, to be honest, there's always one. So just be ready that, which one it will be along the timeline. But it's very important in my mind that when you consider one, you look at who is involved in the transaction, the parties and the role of each party, and you have like a plan there. And I would say as well, realistic expectation, which is sometimes difficult there, but to put in place. But it's quite important because if you rush too fast, that's where we have seen a lot of things that go wrong, responding too fast to an SEC comments, responding or rushing with a bad filing in a bad shape, with not good financial statements, in the first place. So you might save time a lot in my experience by just setting up the stage early on and with the right things and not rushing there.
Great. And maybe, again, can you tell us something about the characteristics of these companies performing international offerings?
Sure. Like based on that, those companies that usually I see or have some connection with, and I speak mostly with U.S. market because that's the one I work on the mostly with foreign companies coming here. I see two main things: whether they already are listed here or want to list here because they have, and they're in a sector that is very active, like I said, like the biotech, and where they are usually trying to get FDA approval, so they have activity happening here in the U.S., or they have a management in place that is in the company that has like connection to the U.S., whether the CFO is from the U.S. or there is a lot of relationship with the U.S., or they just sell and or supply in the U.S. So there's it's very rare that one company will come to U.S. market without one relationship and reason for, to be associated with the market here.
Yeah. And maybe, Cal, can you tell us about how relevant the U.S. is in relation to the international capital markets?
I mean, you can tell by the charts, the graphs, right, that they are. I think, it's important, I think, though, to highlight that I think, all markets are relevant and reliant upon each other, right? So, you think about, what's the purpose of capital markets is to promote the, economic efficiencies. And, they do provide that mechanism for people, companies, even governments, right, to borrow and invest across national boundaries. So, in the benefits are vast. You're going to get, higher returns, potentially cheaper borrowing costs. And when you think about some domestic markets, currently, and even into the future, they might be too small or even too costly for a company to borrow in. Kieran, as you said, when you look at the size of an offering and how much it might cost to go public, that's something that you have to consider. And obviously, if companies do have more options to raise capital, then this could be a win-win as well as for investors, right? So if you're not just looking at companies, but investors benefit, because investors want to have more investment choices. And I think that's why you see so much activity in the U.S. markets, is because there are a lot of choices and a lot of investors come because they want to be able to pick and choose. And I think Guilaine mentioned this earlier, which I think is very important. And it really is, the investment options, making investment options available earlier in the company's growth cycle than later. And that's what the chairman of the SEC was primarily focused on when he came in at the beginning of the Trump administration, was really, broadening that, expanding it, easing regulation a bit, helping companies, go public, stay public. And so I think that's been the focus, because as we all know, there's a lot of private capital that actually has the effect of keeping smaller investors out of the market longer than an investor would like.
Right. And Guilaine, maybe can you tell us something about the parties that are normally involved in an international offering?
Sure, Kieran. I think, as I said, first of all, it's important to see that as a team coming, early on and engage different parties early on. Obviously, it depends which transaction and the size of the company, but you will always want to think, right, their company is there and they're the driver and the driving force here to organize the offering. The company, international lawyers, the banks, the international bank lawyers, the auditors, and consultants as you need to make sure that, depending on how your financial statement has been prepared in the past or any other activities, the controls environment, being ready with that. So I think they are the key parties that you need to get involved and engage when you think about an international party.
Yeah, and obviously as well, if you have a foreign regulator involved, I guess the interaction with them is going to be very important. I guess the other thing I've noticed, even for a lot of even for the Brazilian offerings, the Brazilian IPOs, almost all of them have a significant international offerings as part of the local Brazilian IPO, and a lot of the time you see people working on the local Brazilian offering, thinking about the local Brazilian, I guess, content, and then they only involve the international group, international bankers and lawyers in later, and then the international group come in and start discussing the benchmarking with the U.S. requirements and start bring up a number of issues. And maybe you could tell us something about the references for content of an international offering document, and how big it is, and what and how much of that are financials.
Sure. I think it's key, first of all, to your point, Kieran, if you're thinking about a transaction that involves a local market like Brazil and the U.S. at the same time, not to only focus on one and then forget about the other one, because which is a challenge for a foreign company like that is to be sure you're compliant with both. And sometimes we get in very much difficulties or last minute fire drill because something that you view was the way to do it in Brazil is not actually the way it happens or it's done in the U.S. for whether it's an accounting position, whether it's another rule in there. And we have that coming all the time. So the first piece is definitely, when you think of an international offering, is the financial statement. And for a U.S. perspective, they have to be IFRS as issued by the IASB. Sometimes I see, and that's sometimes a challenge, is if there's local interpretations or of an IFRS, for example, that might not be the view outside of Brazil or another country. So it's very important to not forget that the financial statements are key there, and that's the first piece, and the MD&A will go with it. And the MD&A are very key as well to put together in line with the financial statement that you are going to have for your offering. Understanding as well whether you're going to need interim financial statements. There is very often surprises there because company may be used to not do interims or don't think they will need interims. They are told they don't. There is under the SEC rules, there is no need. But to your point, when the international bankers come in or SEC counsel comes in, they're like, yeah, we want, further development or recent developments. We want more information. We want more financial statements. So it's very important to understand because you can't, prepare a set in few minutes and get the accountant to review and all that. So financial statement and the content is one key element with the MD&A. Then you have obviously a lot of other parts that are important on the content of the offering, like the business section. You're going to have what is the offering about. Do you have, depending on the offering, some questions if it's a merger, what is it involving there, and obviously some consideration on the forecast or where that company is going to go. So they are the key piece. There's a lot of other information needed, and I always recommend to start with the form. So once you have decided that you're coming to do, whether it's an F1 for an IPO document, an F4 for a merger, or 144F for debt or equity private raising placements, just look at the form, look at what they are, and follow the instruction there. So many people just don't even look at the requirement of the form there before, very much in the late process, or leave that to the external parties to look at. So I think that's a little bit few of the items, Kieran, in my mind.
Yeah, one thing, though, to just point out quickly with, Guilaine had mentioned the challenges of kind of dual listing. And, that's one thing I think people don't have a good appreciation for, that, one thing that the Securities and Exchange Commission has done for years has obviously encouraged foreign listings, right? I mean, there are a lot of accommodations for foreign listed companies, foreign companies to list in the U.S. And that's continued. I mean, it's not the goal is not to have so much rigor and so many rules and regulations to just deter people from wanting to come and list in the U.S. And one of the things that, Guilaine, why I got to know Guilaine initially was because they would come into the SEC and talk about the challenges that, companies, foreign companies, FPIs, dealt with, and how to figure out ways to accommodate kind of the dual listing, the complying with the standards in the home country, or other, exchange or, and other regulators. So that's something that I think, it will continue, really to encourage, companies to list in the U.S.
And it's a very good point, Kyle. Actually, I just want to mention to all our participants here, as you think about it, and that's why it's important to involve all the parties early on, is if there is an issue, we definitely get out of our tower here, and we definitely are engaging as we need as well with the SEC, or help companies to engage with the SEC as needed there, to make sure that a foreign company is not getting penalized because they have to be dual compliant. There's a lot of rules as a foreign entity that are definitely different than what a domestic company can do. A lot of the requirements will be in line with what you have to do for your local purposes, but it's important to understand which one are acceptable from an SEC standpoint and which one are not, and we end up sometimes to have to discuss some with the SEC to be, hey, is there any waiver to obtain, or is there any views from the SEC, because it sounds like we're getting a different message from the local regulator than from the SEC, so how do we reconcile both? And so I think it's key to try to identify those potential early on, which sometimes are difficult. But we have a mechanism, like Kyle said, and we meet as well as a group with the SEC on a recurring basis through the IPTF, the International Practice Task Force that I represent there. And Kyle from the SEC before was, used to participate as well in there. And we have great conversation on some of the relevant topics, trying to make it easier for foreign companies, or discuss some of the technical issues that we have. So I definitely recommend, if you have some issues, please raise them, come to those, is there anything that could be on the topic or the agenda? We are actually meeting in November. Please don't think hey, they are just a regulator, they don't care, we just have to follow. They are very open to have a conversation and see how, it makes sense and it's practical, I think. It doesn't happen all the time, I have to be honest. We don't get
I was waiting for that.
Kyle, I had to say that, Kyle. It doesn't happen all the time. Of course, I'm missing Kyle on the other side. But obviously, it is always good as well. I always recommend, personally, to just ask them early on versus and let them know, transmit a letter when something is different than what is expected, or contact them to get a view. It's always better to get a view before than dealing with 20 comments or comments that never go away. So, yeah. It doesn't happen all the time, unfortunately, but you have to be helpful a little bit more sometimes, but that's okay.
Yeah. I remember in the past we had a lot of discussion with the via the International Practices Task Force in relation to, I guess, a lot of issues that appeared in Brazil, like from the times of hyperinflation accounting to contingencies. We have a huge, due to the regulatory environment, we have a huge amount of contingencies and a lot of discussions as to how to, I guess, appropriately record those and disclose those. So, there's a lot of those things were aligned through this body, which I guess is something. As we continue having a lot of issues, I guess is something we're going to be looking at in the future as well.
Kieran, let me take advantage of this subject and raise a question here to Guilaine. Guilaine, you reviewed, had contact with European, Asian, U.S. companies, a lot of Brazilian companies, biggest ones. So in terms of, improvements that you can often see that the Brazilian companies could do better in their fight with the SEC, what can you tell us about, what Brazilian companies can do better when you compare to the other markets in the world?
I wish I could say I love the Brazilian companies and I love Brazil, as you know. So, and I missed a trip this year, unfortunately, to Brazil with the challenges there. So, I would say, it's every country, as you can see in the process, and you can see in the way it's approached, as the cultural bias, right? So Brazil is great because there's a lot of enthusiasm about an offering and a lot of activity there. And so I think, there's a lot of relationship between Brazil and the U.S. So I think it's always great to see how much enthusiasm there is and how much connection there is to really be listed here in the U.S. from a Brazilian company. I would just say it's hard to compare to, specific country in Europe or specific, other territories there, because some of that is as well company by company, but the culture definitely plays a big role, right? So, and there's definitely differences between the culture in Brazil and the U.S. So you can see the bias, or in Europe, so you can see a bias sometimes or like an impact on the actual offering. So for example, and the offerings or the documents out of Brazil tend to be very long. I have to be honest. They're long financial statements, a long kind of information. And so sometimes, and you may know, and I will point here that there is a rule from the SEC, for example, on risk factor, and I can definitely talk a little bit more about it, and disclosure, simplification, and transparency. And sometimes I think it's as well the challenge, especially from Brazil or other country where there's a different language, is it's how the translation is done to the U.S. market. And there's a tendency whether it's a translation or the document themselves are very long. So it's sometimes a challenge to make sure that all the key information is there, but there's as well, it's not hidden somewhere in the document where an investor is going to be kind of not seeing the big picture or seeing the key important information. So I would say that's one item is simplification and making sure that, yes, there is all the key information. Sometimes it's missing the key piece because it's just trying to be too long. And then making sure that it is clear. And again, translation is usually a challenge sometimes.
I think to your point there, I would say when you say clear and then you say, the translation is a challenge, I think that's a big piece. And I think I'd always say when I would, review FPIs or even interact is being concise, right? And I think there's a tendency to over-disclose to make sure you don't miss anything. But, really at the end of the day, it's a document that is for investors. It's not the audience. People come into it and think the SEC is the audience. Then the SEC is part of the audience, but that's just the beginning, right? It's the audience. It's your investor. And so I think you have to have a document that an investor can understand, can navigate. it's clear and concise. I think those are very important points. So, Guilaine, I think you're spot on with kind of the length. When I used to get an FPI to review when I was at the staff, I would cringe because it would be 500 pages long. Whereas, you look at a company like Comcast, who's a big telecom company in the U.S., that document is, anybody can pick it up and read it in probably half an hour. It's very clean, concise. It's clear. It's focused on material disclosure.
Yeah, and I think, and the second point, Kyle Marchesino, I think that I will say, which is very important, and the reason I was putting the point about the team and the team together, the plan. Definitely, every transaction, as I said, has a fire drill. But there's a lot of surprises and communication sometimes that could be helpful. I think, as of Brazil, it's definitely a tendency to come late on some of the information and then rush. So I definitely recommend, again, there's no need to rush. I understand the market is there, but again, it's important to be in the window, and everyone will do their best efforts to get in the window in the right time in the market. But I think just an heads up, it's coming, we are planning here, and that all parties know the same information, it's always very key. So anything, and I will say that for every country, but definitely out of Brazil, I would say just, make sure there is great communication with all the parties and to avoid too many surprises. It's always helpful.
Great. And maybe, Kyle, can you tell us about what you would think of what would the more important information for an investor?
That's a great question. I think it's going to depend, right? I've in my years, especially over the last 10 years, 8 to 10 years of kind of being in a more senior position at the agency, there were a lot of meetings with investor groups, various advocates for investors. And I think they all have their own particular needs. Not all investors, look to specific areas. That they will view certain areas and focus on them that they're interested in. And I think it's going to depend on who the investor is, right? Like an institutional investor that cares strongly about ESG disclosures is going to look for that. They're going to look to see what's out there, and whether it's in the document or sustainability reports. Is it a bank that really only cares about getting, the right return on its investment? So who is the investor? I think, Guilaine had already mentioned this. I mean, the historical financials are really the foundation of any offering document. And then I think you build from there. From my perspective, I think the probably the most important part of a document, and I think of just that from the perspective of if I'm investing in a company, is the management's discussion and analysis of its business prospects, which really are going to build off of kind of, as Guilaine mentioned, the business section. So what do the prospects look like? What are their trends? What are their future prospects? And are they then, supplementing that information with forecasts or expectations of, future prospects? So, and of course, in this environment, right, it's liquidity and capital resources, right? Is this company going to be able to withstand this COVID environment? So I think there's a number of areas that the companies investors look at. I think it depends on kind of what their pet issues are, but I think at the end of the day, it all comes back to the foundation, which are the financial statements.
I guess just on that, I mean, there's a lot of discussion, at least in Brazil, at the minute about ESG. And I guess there's already a lot of required disclosure about that within the U.S. environment. A lot that you would expect to put in. I guess it's just never been. I guess it's just not lumped together in a place that you call it ESG. But there's a lot of information in there already in that respect. Yeah.
No, that's a fair point. I think it's interesting. One of the things that happened recently in the U.S. was the SEC adopted a rule, within the last month that was, if you weren't paying attention, you wouldn't have seen it or noticed it. But they adopted a rule to, as Guilaine mentioned, kind of limit the risk factor disclosures because they tend to be very long, and so they're essentially going to require that the risk factors be limited to, a certain number of pages. And if they're not limited to that number of pages, then there would be like a 2-page summary at the beginning of the section, so an investor would be able to navigate and really see what's highlighted and what's the most important risks. And embedded in there, there were some changes to legal proceedings, disclosures. There was changes to the description of business. Well, the interesting piece there is that there is a new human capital disclosure requirement. And so you're starting to see a little bit of even the commission highlighting it. Now, it is principles-based. So what does that mean? It means that, if it's not material, then you don't have to disclose it. But you do find a lot of companies already provide those disclosures, in the U.S., but obviously in Europe, other countries where ESG is a strong focus. But as you said, it is interesting. There are so many prongs and elements of ESG, and it's already required disclosure. Some of it's already required disclosure, but I can tell you there's a strong push for even more, a strong push by a number of folks, whether they're institutional investors, proxy advisors who really are pushing, and they're giving grades on people's, on companies' ESG disclosures. So it's a real thing, and I think it'll get even more attention. The one thing that I think, just to answer that, there's a question here in the chat about what can change at the SEC as a result of the elections. That's a great question, and I could talk to you for hours about it. I won't.
You should. It's probably very entertaining, Kyle. I want to hear that because,
I'm sure the audience is.
It will be a different perspective here than what's happening in the news today. Yeah. So please share.
Well, it's interesting. I can tell you that look, politics absolutely play a role in what the SEC does. They do. But I can also tell you that the great thing about the SEC is its structure. It has 5 commissioners, and there are always, 3 commissioners, 3 of the commissioners, led by a chairman. 3 of them are from the party that is in, obviously has the administration, the party that's in power. So right now you have essentially 3 Republicans. Jay Clayton is essentially a Republican because he was the chairman appointed by the president. And then you have 2 Democrats. And so the goal there is really that you have some balance, and that it's a very deliberative process. It's not an agency that's led by just one person who just makes a call and passes a rule. Every rule that is proposed, it has to be proposed. The public sees it, they can comment on it, and then it goes through the process of adoption. And so it's a very deliberative process. And so you can expect, if there's a change in the administration, so if Trump gets reelected, then you're going to continue to see a chairman that is Republican, likely not going to be the current chairman, Jay Clayton. That's a very hard job. It is, around the clock. It is a very tough job, because you have a lot of interest, not just from the administration, but also from Congress, and the pressure from everywhere else in the world. It's not an easy job. If there's a change, if Biden gets elected, you're going to see a Democratic chairman get appointed, and you're going to see that they will have 3 seats, 3 votes to the Republicans' 2 votes. What does that mean? It means that there might be more regulation. There might be some of the things that this current commission scaled back on. You might see some more regulations put in place. I think you can expect to see a much bigger emphasis on ESG matters. Potentially climate change disclosures, things that companies are doing now and thinking about and talking about. But again, it really is, it's going to be a push, I think, could be a push towards more disclosures in public company filings with the SEC. And so that could be a pretty big change.
Yeah, and on that point, Kyle, right, I think there's more and more discussion around, and to your point, Kieran, though, I know internationally a lot of people have looked and putting ESG discussions, in different parts of the document and all that. But I think one of the big discussion here now is if you do have to report on ESG, what is the guidance? What is what are the standards? And will the auditor report on it? And how would they report on it? And what is the framework for that, right? Because like Kieran mentioned, if we get a more democratic commission, definitely there will be a push there because of that's, part of the big discussion here. But then it gets a challenge of how is it comparable from one company to the other? What does that mean? Is that, in a more regulated environment, like Kyle mentioned, if that's the case, how do you control? What controls are around those information? Because especially if it comes to a filing with the SEC, obviously then you have, and people are interested with data and numbers. And so what are the controls around those? Who is doing any audit of those? What is the approach? And is that consistent? So I think there's a lot of questions then that come, and how would that impact us as a companies, auditors, working on those international offerings here? And what will be the impact? And I think a lot of it is, at this point, correct me if I'm wrong, Kyle, but a lot of it is, question that we are starting to think about versus we have a solution here.
Yeah, no, absolutely. We did put out, PwC did put out an in-depth on the new rules, which touch on the human capital. And it's as Guilaine mentioned, I mean, there's a little section, a little blurb in there on basically how to think about your controls. And how to think about those particular disclosures. And I think, the challenge is going to be, as you mentioned, Guilaine, is, the standards that you would apply. I think it's going to be one thing that will be interesting to watch how the commission, if there is a change, they obviously won't just do it overnight. Okay, these rules take time because of the deliberative process that the rulemaking takes. And so you will see probably a release, a concept release, which will have a lot of questions, that they'll pose and get post to get feedback and comments from the public. And then, of course, then they go through the proposing phase, and then potentially to an adoption phase. And so, it is something that it's not going to happen overnight. It would absolutely take a good chunk of time. But it's something worth watching, and I think it's something for people who have an interest in that space, especially to keep an eye on, and potentially even comment on if there is a heavy interest in wanting to see a kind of a standards put in place or some sort of rigor or structure around some of these ESG matters.
Yeah, and I think it's interesting, especially for companies out of Brazil, because there's a lot of activities there out of Brazil that are impacting or that could, are related to the environment.
Right.
And whether it's an agricultural company, agribusiness, a lot of that, and there's a lot of efforts that are made there. I know most of those companies, and I had discussion over the years, are doing a lot for that. So it's like, how is it reported and how it comes in there? And then maybe a question for you, Kyle, based on what you mentioned there, sorry, I'm asking there is, I know the current administration and the current commission is very focused on the Main Street investors, right? So they are like facilitating the capital market, but at the same time, they have been tough when needed on enforcement. Do you see a change from an enforcement position? Because we sometimes forget that this commission has been actually doing some quite big enforcement decision. And so maybe it's a point here to just like, what are we seeing? What do we see now on enforcement in the future, right?
What's interesting? Here's what's interesting about the current commission. So I think it's going to depend on who the commissioners are. That's largely going to drive it. And so part of it really is, yes, who's Republican versus Democrat or whatever. But the interesting thing that I have seen, what I've watched kind of while I was there and, now from afar, it's interesting to see, certain commissioners. So Commissioner Hester Peirce, she is a Republican commissioner, and she tends to not support a lot of the enforcement actions, or she supports them, but is not always in support of what the penalties are or should be. And so it's very interesting. She almost always has, probably at least once a month, she has very interesting statements related to some of the enforcement actions that are taken. And of course, they're taken by a chairman who's, essentially a Republican, right? Because he's appointed by Trump. So yeah, I think the chairman really surprised me when he came on and really started that focus on enforcement cases and bringing them quickly. I think that's the other thing. I think the whistleblower program and some of the impacts there, really pushing that agenda, was definitely a surprise for me to see, especially with his background, right? The chairman was a Wall Street lawyer and worked on a lot of these deals. So that I think was I'm sure the Division of Enforcement at the SEC was refreshed by that, because I think they probably didn't expect to see that. I think if depending on who the next chairman is, I think that's going to, obviously the chairman sets the agenda for the agency. So the commission itself does not determine what the agency will do. So when the chairman is appointed by the president, the chairman then appoints his own directors or heads of the various offices and divisions throughout the agency. And so you have over 4,000 employees there that they're directed to kind of go in certain directions based on what the chairman decides he wants on his agenda, or she. And then, of course, the commissioners then they each have a small team. They don't have, direct oversight of the staff of the agency. They essentially are there as, they vote on actions. They are the commission. And so they don't have essentially the direct day-to-day oversight of the staff. And so it really does fall on whoever the chairman's going to be. You can, best put your bet on whatever their issues of the day are, or what they focused on when they're essentially in private practice or elsewhere. That's going to be the direction they're going to head as a chairman.
And two things there, and Kieran and Kai, I think, based on what Kai just mentioned, I just want to highlight here for companies is, Kai mentioned the whistleblower program, and I think the SEC, and in this environment of COVID-19, they actually mention that the number of whistleblower tips increased a lot during this period, right? I forgot the exact number, but definitely increased a lot. And whether it's because people feel like more comfortable to report based on this virtual environment, or because there's more fraud happening.
Or there's a bigger incentive and they're actually going to get paid when they do whistleblower.
So for everyone here, auditors, companies, I think it's very important to understand in this environment what controls are happening around the fraud system, or the fraud that could happen, or any controls about the information. And then at the same time, being aware that there's definitely a big increase of whistleblower, and understanding what's the response as a company and as auditors there about that. So definitely, I think it's always like a 30% increase again. So very, very significant in this environment, and definitely a lot more. And maybe we can give a couple of examples of enforcement if, Kieran, you think so there. But I think it's important to remember that, I don't want to scare anyone, but it's very important that to understand the market and the environment when you do an offering in the U.S. on some of the expectations there from investors, from the SEC, and looking at some of the enforcement decisions. I always think it's interesting to see what was the story there, right? Why something happened, and why enforcement decided, and what the penalties are, and it impacts every market, including Brazil. And so it's always something to just think about and look at it.
Yeah, we've got a couple of questions here. First from Paulo Aracaki. In respect of costs, U.S., Brazilian, and other markets, is it possible to explain where it is more reasonable? Well, first of all, I think that the question is here. Outside the U.S. is often more expensive, and the valuation plays a big, and the liquidity plays a very big role in this. Now, the other thing is there are a lot of markets, and there are a lot of, I guess, different sizes of markets, and around the world, for example, I think we've talked here about there's a lot of offerings that are private offerings, 144As and Reg S. There are exchanges with, there are exchanges focused on on having reduced costs. I mean, in Canada, we have the TSX Venture, which is specialized mining and technology for smaller companies. In London, we have the AIM. Even in the US, there's special rules created for emerging growth companies. So I think it depends on I think it's not just you could just do an international offering without listing anywhere. It's probably going to be your cheapest, potentially your cheapest offering, or in a listing and somewhere where the level of regulation is a lot lower, and that was a discussion of cost, but not necessarily. But I guess it's not necessarily the cost that alone that drives the discussion. So it's in that respect.
Hey, Kieran, when we think about cost, I mean, how much do you advise companies when they ask that question? What is because I think when I think about cost, I think about kind of there's a day one cost, right? Like you have a day one cost, but then you have the cost of the ongoing reporting, right? So and I think you then balance that with the ongoing reporting is transparency and providing investor with real time information. It is giving, it is obviously the governance, the regulatory regime, that things like that, that transparency, the controls, that's kind of the value, and that might, and so your day one cost might be a little higher, right? But then over time, yes, you still have the reporting obligations, but you have the benefit of potentially lower costs of capital, obviously liquidity. And so I wonder how often companies focus really on kind of what's my cost on day one versus, over time, right? The next 3 to 5 years.
Yeah, that's a great point, Colin. What we've seen is a lot of companies just focus on the bare minimum to do their offering, to do their IPO, and they don't plan sometimes looking into the future and what they're going to have to do in the future and to prepare for that. And we've had a number of issues in Brazil about companies going to the market and just focusing on the first, the first offering process and not thinking about the subsequent events and the subsequent requirements and got themselves into issues with that.
Mm-hmm.
We've got another question here from Paulo Furtado asking about the integration between FASB and YASB and to the standard accounting rules. And I guess to that respect, a number of years ago, the SEC did their, when it was getting, there was a big, I guess initially the SEC, there was a big discussion about whether the SEC would accept IFRS for domestic issuers, and then they did they did that research, global research in terms of IFRS and in terms of comparing IFRS, and I guess raised a number of issues in terms of quality of the reporting, consistency, quality of the disclosures, and I guess at the minute, I'm not aware of any, I guess, deadlines in terms of bringing the domestic issuers, allowing them to use IFRS as issued by YASB?
Yeah, I think that was something, at least from the SEC perspective. I mean, that was something I think the chairman, Christopher Cox, years and years ago had pushed. And I think, over time, I think that it kind of went away. And there hasn't been a push. Obviously, there are this current chairman and the commission, and even the last, couple of chairmen have not pushed that agenda. But I can tell you, though, at least so the convergence or allowing companies that are, let's say, a domestic U.S. company to use IFRS, you're not going to see that, I don't think. But there are a lot of accommodations in the SEC kind of rules for FPIs. And on top of that, it's something that, as I mentioned, because of the engagement that the Division of Corporation Finance has with people like Guilaine and others who are on the IPTF, in those interactions, they are, they're sharing their challenges. They're sharing kind of, hey, here's what's going on in these other places. And right now, you see rules that are coming out. So there's a recent rule on Rule 305, which essentially addresses acquired businesses. And so if you've had a significant business acquisition in a period, what financials need to be provided. And there are now some additional accommodations where you can use, let's say IFRS or reconcile to IFRS, if you have, local GAAP and you want to comply with the SEC rules. If you're a foreign private issuer and you apply IFRS, if you have an acquisition, you don't have to reconcile it to U.S. GAAP or whatever. So there are a number of changes there, and so I think you'll continue to see some of those. But I don't think, at least, there's definitely not a push for kind of more convergence or even allowing other companies, at least domestic companies, to use IFRS or report using IFRS.
Yeah, I would just add that two things. So the question was, how is the integration or how is the relationship between the FASB, the IASB, and the SEC? So a couple of things. One is definitely, like Kyle mentioned, there is a lot more friendliness on using IFRS in many other situations by the SEC, and the SEC is involved, definitely very much with the FASB because there is an oversight role. There's a different rules with the IASB, and the SEC as an observer, though, with the IASB on every single meeting. And I think it's important not to forget that because there is a lot of relationship, whether it's between the SEC and the FASB and the SEC and the IASB. I don't see a conversion or even an effort these days between the FASB and the IASB to, work together. This is because there's no push per se on they realize it was very difficult and all that, right? However, the SEC itself has relationship with both parties and in the interest of investors, I think now investors are very much so knowledgeable about both IFRS and US GAAP. So there's definitely an increase of the use of IFRS and therefore a much bigger even involvement and relationship between the SEC and the IASB and or the SEC and IOSCO, the international organization. And so there's definitely a focus of it. When you think about it, a lot of the US investors are investing a lot of cash in international companies, and as such, the SEC is very focused on making sure that they have the right relationship with the IASB. So no relationship too much between FASB and IASB, but definitely even less, I guess, than what Kieran mentioning before, but definitely a big relationship with all those parties still on what's happening.
Yeah, we had another question here for Paulo Alcacchi on internal controls, SOX and JSOX. I guess, Paulo, we're going to be dealing with that in the next webcast on the 4th of November. I guess, Kyle, come back to you in terms of the different regulators around the world, and I guess could comment a bit on the different levels of regulation and the, I guess, potential communication between regulators.
Yeah, I mean, I think, look, there is communication between regulators. I mean, and obviously that occurs at a higher level. It's definitely not something that happens at the lower level staff, but there is a lot of communication between regulators. And, frankly, it is about, hey, how does, primarily has been how does the U.S. do certain things, right? I think the chairman and past chairman always kind of tout the U.S. as the best capital market in the world, and that the SEC is the best regulator. And it's hard to say. I don't have a lot of experience in kind of as let's say in a company going public. What they would deal with for going from one environment to another, but I can tell you that when thinking about how the staff does their work, they do spend a lot of time. Other regulators, they have different events where they host regulators. They have a lot of conversations about the program. They exchange ideas. So there are a lot of discussions. I can imagine that the chairman and his team have probably the most interactions, but I think over my last 2 or 3 years there at the commission, I was involved with a lot of meetings and a lot of regulators, but from smaller markets where they would ask questions about the division's review program. How does the staff review a company's filing when they go public? What does that look like? The transparency of that review process, right? And so, the SEC posts comment letters, the response letters. When they issue a comment letter to a company, you see the responses. Those things are published. So there's a lot of accountability. So the regulators are not just holding the line with companies and registrants, but they also are being held accountable as well. So I think that's probably the big piece. And look, I would think that the SEC's regulations, I've been doing it for 25 years. I still haven't figured it out. We work together. It's like, Guilaine and I work together on a lot of issues and topics. It's a challenge just to comply with, GAAP or IFRS. On top of that, you have a regulator to deal with, the SEC, or even, if you're listing, the exchanges requirements. And so, as we've said, it's super important to get all the right people involved, get those people involved early in the process, as early as possible, because otherwise you're not going to be prepared. You're not going to think of everything. And so that's why you do need the right people.
Okay. And Guilaine, maybe could you tell us something about the key concepts for international offerings and I guess especially in financial statements and that go into the international offerings and the use of IFRS?
Yeah, I think the few things, I think we covered a lot there, and I know there's a question on SOX in there that, as you pointed out, we'll discuss in more details in the future. But two things I would say. One is important for the financial statement to be IFRS ISB compliant. Two is to understand how many periods you need. As you know, depending on the size of the company, you may need 3 years, you may be able to go 2 years, and then there's even some accommodation to go with 1 year for your first confidential filing. So there's a lot of accommodation that came up, but again, the one is what financial statements you need. They need to be IFRS ISB if you're an IFRS, or US GAAP for a US GAAP. And you need to figure out the period, and then whether you will need interim period, and then what controls you have around the information in there, because it's very usual these days with the number of level of IPOs and companies coming earlier in the process to have a material weakness or more than one in an F1 IPO document, for example. So sometimes it's a little surprise for companies or discussions if they have not been involved with what that means. Especially companies will say, no, we don't have to report on controls yet. And it doesn't mean that if you know there's a material weakness, you don't have to report it. So it's important to get the context. And to be honest, we see so many, especially in the IPO process, it doesn't impact much the company and the valuation anymore based on the number of, depending on the size and what the IPO is. So I think that there are a couple of things to think about. There is the financial statement, the control environment, and the document, like I said before.
Okay. And I guess, Kyle, can you tell us, is it possible to make an international offering without listing on any stock market?
Yeah, I mean, you guys, we've already talked about some of them, right? So, if you think about the U.S., obviously, we mentioned Rule 144A, kind of an equity offering. And for those who don't know, that's your, unregistered offer and sale of securities that are issued by even a U.S. company. Foreign companies can do it. We, as Guilaine mentioned, we see a lot of those. And that aren't going to be listed on an exchange or even quoted on a U.S. quotation system. Companies can utilize Regulation S. They can. There are other kind of exemptions there. There's Regulation A for smaller issuers, and now there are some requirements there for Regulation A. But you can actually. The great thing about Regulation A is that you can actually flip the switch at a given point in time and potentially, so it's almost like the IPO on-ramp, right? And so I think it allows companies to start reporting earlier. The reporting requirements are not as robust or strict per se, restrictive, and so you don't have that same level of reporting, but you do have some reporting, so companies can get used to kind of recurring reporting that's not as hard to comply with as it would be if you were just an Exchange Act filer. And then, of course, you have even regulation crowdfunding. But that's something I think, too, to keep an eye on, depending on who gets elected, right? Because then that could mean there's some changes there about not just the types of transactions and exemptions, I guess, from, having to do very specific and detailed filings. Depending on the next administration, it could change the size of those offerings, right? And so there are some requirements with respect to those offerings that they are limited to a certain dollar amount. But again, those are some areas to think about if companies are looking to start filing, looking to raise capital, but they don't want to have kind of the same kind of challenges of listing on an exchange and reporting on a regular recurring basis.
Okay, great. Thank you very much, Marchesino, Guilaine, and Kyle. I think we've come to the end of our time. So thank you very much for all your thoughts and input. I think now we're going to have to switch to the test for the local regulatory purposes.
Thank you, Kieran.
Thank you, guys.
Thank you very much.
Appreciate it.
Thanks very much. Okay,
Bye.
Thanks very much. Okay, so I guess now for those people who are watching from Brazil and want the training certificate for CRC purposes, we're going to start going through the questions. For local CRC purposes, you have to get at least 3 out of these 4 questions correct. So we're just going to go through these questions. So hopefully Joyce will put up the first question here. And then, so a local company may offer, a Brazilian company may offer securities locally to the public with a non-public foreign offering, locally to the public and also to the public in a foreign country, or all of the options above. So I guess the first question here is in terms of to whom you can make an offering locally to the public and with a non-public foreign offering, or locally to the public and also to the public in a foreign country, or all of the options above. So I think we discussed here in terms of the options. If you do, for example, if you make an offer to the public, for example, in Brazil, an IPO, does that mean that you can also make a foreign non-public offering? Does it mean that you can also make a foreign public offering, or can you just make an offering to all the options above? The poll is finished. The correct answer was D. You can do all of those. In the case of an IPO, you can have an IPO just in Brazil locally. You can have it locally with a foreign non-public offering, like a 144A and Reg S, or you can have a local public offering in parallel with a foreign public offering. So the vast majority got that one right. So we'll go to the next one. So number 2, the company is listed in both local stock exchange and a foreign stock exchange should follow the respective regulatory requirements of the local exchange. Option B, of the foreign exchange. C, of either the local exchange or of the foreign exchange, or of both the local exchange and of the foreign exchange. So whenever you're listed with a local stock exchange and a foreign stock exchange, you need to follow the regulatory requirements of which of just the local stock exchange, of just the foreign stock exchange, you choose either the local or the foreign stock exchange, or you have to follow the regulations of both exchanges. So whenever you've got a dual listing and you're listed on 2 exchanges, and then what are the regulatory requirements for that? And I guess just to remind you, next week we have our quarter end webcast. We're going to talk about taxes and accounting issues. and November the 4th, we're going to talk about internal controls and Sarbanes-Oxley. And here you have the contacts of our speakers today. The answer number 2 was both. So it's one of the issues that we have that you have to you have to meet the requirements of both. That's one of the challenges of doing dual listings. You have to meet the regulatory requirements of both regulators. The vast majority of people got that one. So hopefully we'll go to the next question. Number 3, what are the important concepts for successful international offerings? Is it A, transparent disclosure, B, following the applicable regulation, C, good preparation and diligence, or D, all of the above? So for the purpose of so what are the concepts behind performing a successful international offering? Is it A, transparent disclosure, B, following applicable regulations, C, good preparation diligence, or D, all of the above? And it's also worth mentioning that these webcasts are recorded. They're going to available on our website. So this webcast should be available on Friday on our website. And then if anyone wants copies of the slides, just send an email to our email address here, _novis perspectivas @pwc.com. And then if you want a copy of the slides, and this is the same email to use if you want to receive invitations for future webcasts. So this poll is finished. The correct answer was D, all of the above. That it's got to be transparent, follow the applicable regulation, got to be good preparation and diligence. So yeah, the vast majority of people got that one as well. And then, so hopefully go to question 4. Question 4, what type of information is normally included in international offering? Financial statements, risk factors, description of the company and the securities being offered, or all of the above? And so I guess what sort of information would you normally expect in an international offering? The financial statements, risk factors, description of company securities, or all of the above? We talked a bit about here about the typical content of an international offering. And the point that I guess the U.S. market is used as a reference for content of international offerings. Normally, and a vast majority of offerings in Brazil go to the international market. They go to the U.S. market and end up being referenced to the U.S. requirements. So I guess just finishing the time on that. So it's ended. So item D was the correct one. I guess we're going to repeat the questions here for those people who didn't get 3 out of the 4 correct. We're going to repeat the 4 questions. Those who got 3 out of 4 correct, hopefully we'll see you next week. And I guess with that, we're just going to repeat the questions quickly here. So a local company may offer securities A, locally to the public, B, locally to the public with a non-public foreign offering, C, locally to the public and also to the public in a foreign country, or D, all of the options above. And as I say, we're just repeating these questions now for those people who didn't get 3 out of the 4 right in the first one. We record the answers, and then and this is only for local formal training under the CRC requirements. We're required to do a test for people to show that the people have got at least 3 out of 4, and the system records the answers. So we need to record the answers to these questions. So I guess and then I guess to let you know, just to they're going to tell about the future events. So we have next week the quarter close. What's coming up for the quarter close in terms of September closing? What's new, and what you should be looking out for both accounting, regulatory, and tax purposes. So we're in question 2 here. So there we go. What a company listing has to follow the rules of the local exchange, foreign exchange, either local or foreign, or both local and foreign exchanges. So here's the question in terms of which regulations do you have to attend to if you're listed with a local regulator and a foreign regulator, which regulations should you apply? And I got the 4 options. And then I guess just letting you know as well, on November the 4th, and just be aware that on November the 4th, there's a time change in the US, so our US colleagues don't have to wake up because they're already 1 hour, waking up 1 hour before us. So we're going to change the time so that they don't have to wake up as early. It's going to be a 2-hour time difference. So it's going to be 10 a.m. to 12 a.m. On November the 4th. And then you should receive the invitations for that in due course. So the poll has ended for question number 2. Correct answer was D. That number 3, what are the important concepts for successful international offerings? Transparent disclosure, following applicable regulation, good preparation diligence, or D, all of the above. So I guess what are the important concepts for successful international offerings? And then I said on the 4th, we're going to be talking about internal controls and SOX. I asked what are the internal control requirements and disclosure requirements in the local market? What are the internal control requirements in abroad, especially in the US market, which is, and we'll be discussing the rules around that, around how to evaluate and how to disclose control issues and control environment. So the poll has ended on question number 3. The correct answer was D. And now question 4, what type of information is normally included in international offering? A, financial statements. B, risk factors. C, description of the company and securities. D, all of the above. This is the last question of the webcast. I guess just as soon as we finish this is the minute runs out here when we finish this webcast. Thank you for everyone for joining us. You should hopefully receive invitations for the next webcasts. We've got the contacts of our speakers today, and also the if you want to contact us by email, there's our email where you can ask to be included in the future webcast as well. So we're just at the end here, last few seconds in terms of this last question. So thank you very much for everyone for joining. And I guess as this poll finishes, I guess that's it for today. Thank you very much for everyone, and hopefully we'll see you soon. And with that, we're ending the webcast. Thanks.